With us now on Voices of Wall Street is Henrik Fisker. He's the CEO and founder of the electric vehicle company. Fisker, it's always great to see you, Henrik.
It's good to see you again, Hope.
And congratulations on this first quarterly earnings report coming out. You have a lot of momentum going into this next year, but I think one headline that's dominating this week has been the news that you will be working with Foxconn to be manufacturing the vehicles. Talk to us about why Foxconn was the best partner for you.
Well, this is a very unique program we're doing with Foxconn. First of all, we are both investing equally into this program. So it's not like we went to Foxconn to have them build a car. And we really want to revolutionize the automotive industry, but particular the car itself with this program. And creating a car that goes across social borders, a car that can be sold globally and becomes sort of the commuter urban vehicle. And for that, I think Foxconn is a perfect partner because they obviously have been part of a revolution like that before in the phone industry. And they are really, I think, powering forward when it comes to wanting to get into the automotive industry. It's the biggest manufacturer in the world. They already are doing some components in the automotive industry. They have an incredible large supply chain. So part of this is also to take cost out of the entire sort of, I would say, ecosystem of getting a car to market. So I think we are both set really good for innovation. Foxconn, I have great faith in, can come up with some new ideas of how to get a car into production.
For those who have been following the evolution of electric vehicles, I mean, one of the main reasons why people like it, obviously for the energy component, but also because with fewer moving mechanical parts, I mean, you really are looking at sort of these kind of computers on wheels. And I think that also might be a good analogy to kind of bring into why Foxconn is a good production partner for you guys.
Yeah, absolutely. I mean, they obviously have a lead when it comes to connectivity, communications, et cetera. And electrification is something where they're also starting with electrification. They're not coming from a sort of a legacy of gasoline vehicles. So I think they have a different view on where the future in electrification is going, same as we do. And this is really a project that came together, after many discussions. And I discussed with Chairman Young about it, how we could go in and really create a revolution. And that's different than when you think about making another electric vehicle that fit in a particular segment.
Now, when you talk about the design, I know, and when you and I met too, and I looked at the Ocean for the first time, I mean, it is a very distinct vehicle. It has very unique features. I know that you guys have already clocked, tens of thousands of these reservations, paid reservations already. And you talked about with other folks in the media, how people are really gravitating toward the design of the car itself. So will any of that change or be enhanced in any way given this new partnership, or at least that you've now announced?
Well, the Fisker Ocean is coming in a segment that is sort of right now dominated by fastbacks and sedans and hatchbacks. And I think we made a really unique vehicle by going for a real SUV with a design. And as you mentioned, there's a lot of unique features. We are putting some real advanced technology into that vehicle. And it'll I think cater to a certain audience. What we're doing with Foxconn is a different type of vehicle. It'll be priced below, and it will be more of a vehicle that's designed for urban living, for commuting. So it'll be something a little different, or a lot different actually. And it also, in terms of design, will be, I think, for some people, maybe a little too futuristic or different. But that's sort of on purpose to go in and see if we can create a whole new market for this type of vehicle.
And also, maybe people have their vehicles for a long time. So, I mean, in some ways, if you're buying something that's futuristic right now, if they're still driving it, hopefully in, 5-10 years, then the rest of the market may have already caught up and you might see some copycat designs as well, which I'm sure might be a good nod to you guys. Now, part of this is to really diversify also, right? The shared platforms you have with Foxconn, you're not reliant just on Magna. Is 2, though, still sort of the right number, or do you want to go for more?
Our business model from the beginning was about doing, business with many different companies and really sharing components with many different companies to get volume, get to market fast. we're not here with an ambition to become a manufacturer. That's not what we're doing. Just like, there's tech companies which are designing fantastic products, but they don't manufacture them. Now, obviously, the traditional car industry already have a lot of manufacturing plants, so they need to kind of use those, but we don't. So right now, we're not looking to build a manufacturing plant. What we're looking to do is to create interesting new projects where we collaborate to get costs down, where we collaborate to get higher volume and get vehicles faster to market with the latest, newest technology. So I would say, because we are planning to put at least 4 new models, different models to market before 2025, it's likely that we see another partnership coming out on top of what we're doing with Magna and Foxconn, but it's probably something completely different and probably not a manufacturer of sort of a contract manufacturer, but probably something different. So we're in talks with many different companies, and we are going to need a different platform for some other vehicles for sure, because they're going to go in a completely different market segment than what we are doing with the 2 first cars.
I imagine you've been watching the last couple of months here with some expectation that these events were about to happen, right? That, you would have a new administration in the US come through, be very bullish on EVs, trying to start with the government fleets, and then you've got GM sort of rebranding itself, going all in on electric. What does that sort of change in your mind, or if it does at all, about the speed at which you need to execute, about the variety? You just mentioned you're going to have sort of new models, and given that you're still looking at next year, late next year, to have the first rollout, does it really put more of a fire under the company to try to get these out faster?
Well, so a couple of things. You mentioned, generally the growth in electrification. I think that it's clear for everybody that we are going full electric. So it's not anymore if, it's maybe more when. And I think what's happening across the world, not only in the US, but also Europe and China, we are going to see a much faster acceleration towards electrification than we would have thought even just a year or two ago. So that's number one. Number two, however, is that where we're also accelerating is developing new technologies or improving technologies. And one of the handicaps for the automotive industry is still that it takes, normally about 3 to 4 years, maybe 5 years to develop a car. And a lot of times when you buy a car, the technology in that car, the decision was made 3 or 4 years ago what that technology should be. So you're essentially getting a car with 3 or 4 year old technology. And that's okay if everybody's on the same page. But where we're trying to move away from the rest of the pack, so to speak, is actually to be able to select technology as late as 18 months before we launch the car. And that allows us to put newer technology in. So when you get the car, it's going to feel like it has a lot newer technology than any of our competitors. And that's an advantage I think will be really important for us. Secondly, we have developed a unique process of how to engineer and get a car to market fast. So we are looking at getting vehicles to market faster than our competitors and getting more vehicles to market within a narrower time frame. So if you look at any EV startup at this point, none of them have been able to get vehicles to market very fast. They're usually sequenced, at least in the early years, and we're looking at getting 4 vehicles to market before 2025, and that's quite a lot actually. And I think we're going to go into some segments which have potential for very high volume. We're going to create some very unique vehicles that nobody else have, and that's a little different than just wanting to do another Me Too EV.
Yeah, and I know you've used this term before, this Me Too EV, to talk about why it's not just about you versus Tesla and maybe some of these other companies and legacy ones that are coming out. I want to touch on something that you mentioned. I think the fact that you're able to pick technologies just 18 months sort of before that real production timeline. How do you pick that? And how do you also ensure that it is going to really work for you on a massive scale?
So, that's partly to do with the development process, because what it means is that you need to make some decisions early in the development of the vehicle, which is traditionally done later. to be able to fix in certain hot points, to be able to fix in things that allows you to drop in technology at a later stage. And of course, the technology can still be proven and tested separately from the actual vehicle. But for instance, we're putting in a battery cell in our vehicle from one of the big battery companies, which are the latest state of the art, that if I would have chosen this battery, same manufacturer last year, maybe 6 months ago, I would have had the previous cell. So now I have the opportunity to get their latest battery cell into our vehicle, which actually means that we are improving the range over what we forecasted back in 2020 when we launched or showed our first vehicle, because at that time we didn't know about this cell. So we've actually gone to a point where we're able to improve the range versus what we originally said.
Range, places to charge. I mean, these are two big things that people point to as to why they shouldn't really buy EVs right now. You just talked about the range side. What are you looking at in terms of how quickly companies like a Blink Charging, for example, are really ramping up more of these charging stations?
Well, I think what's going to happen, in my view, is that the governments around the world are going to support the build out of a charging network. And the reason is that originally, when the car was invented, governments around the world supported the build out of the infrastructure of roads. Otherwise, the car would never really have taken off. And we are kind of standing at that same point with electric vehicles, where we need the governments around the world to actually push to get this infrastructure of charging stations to happen. And that is needed. Now, it doesn't mean necessarily they have to fund it, but they have to make rules and regulations that actually pushes this infrastructure forward. Example could be a rule that every gas station needs to have at least one charger. Another rule could be that new apartment buildings being made with underground garages needs to have a certain amount of chargers, maybe even at each parking place. Doesn't mean the electricity have to be free, but we need the infrastructure. And because of that, I don't think it makes any sense for individual car companies to make their own infrastructure, because that's really not a good idea for the customer. The customer wants a charging station that is fitting for all vehicles, and they don't have to think about it. Just like we don't think about when we fill up gas in the car today, we just go to a gas station. It's not owned by a particular car maker. And that's the way you want the electric charging infrastructure to be as well, with one plug that fits all cars. Now, I think this is already in the happening at the moment. We have a partnership with Electrify America, which has already built an incredible network here in the US. We're seeing other independent charging groups, which are putting up chargers all over the place. So it's already in motion, but we need that last push for, to get this really set up much faster than we normally would expect it to be. And finally, with the latest battery technologies, we already have the ranges that I think is more than enough for most people. In fact, I could imagine later towards the end of this decade, I can imagine once people get used to electric cars, and for sure the second electric car, when they have two cars, will be with a lot lower range, meaning smaller battery, because at the end of the day, the battery is the most expensive part of the car. It's very heavy. So if you only really drive to work every day, maybe 20, 30 miles, you don't really need a giant battery with 300-mile range, at least not for your second car. So I could imagine there will be a change in the perception of the customer, where they realize they don't really need that huge range that they are craving for right now. The reason we're craving for it right now is because, we're a little worried about the infrastructure, but later that's going to disappear.
Well, one of the challenges is that because this is a new technology for transportation on the consumer side, that they may not be able to experience what you just said until they have driven it for a little bit and understand what their own experience might be. I want to get to that in a little bit, but speaking here more about customers, you've got about 12,500 of these paid reservations. Have roughly about 5 million EVs globally on the roads today. Is there a metric for yourself or the company that you are aiming toward to say, this is where we want to be? Here are our goals. We want to be an X% of the EVs in the market. How are you looking at that?
Well, the market potential is gigantic. There's only so far sold about 2 million electric vehicles a year. And, the total amount of vehicle produced every year is about 80 million or so. So the growth potential is enormous. We don't really look right now this early in our sort of, life about taking a certain percentage of the global market share. We are looking at specific segments where we go into what are the type of volume that we can get in those segments. And I think that the opportunity still is so big because we're making vehicles which really don't have a lot of competitors. If I was making, of course, a vehicle that was like everybody else's, now you need to start thinking about how many percent can I take of this segment because I'm appealing to exactly the same people. But in our case, our vehicles are so different. And, we have, because we're going directly to our customers, we have, as you mentioned, well over 12,000 already. We're able to do our own internal surveys to figure out why people chose our vehicle, what they want from a vehicle, what they like about our vehicle. We can also figure out what people we need to target more. Because we can, for instance, see right now, unfortunately, the 90% of the reservation holders are men. So we know we have to go and actually target women buyers because we think it's a great car for women too. So those are the type of things that we can do when we can then plan for our digital marketing and specifically target the audience we want to go to. We haven't done any marketing so far. We'll start our marketing end of this year, but it's going to be a real data-driven marketing that we're going to do online.
I like that. And I beg of you to select your influencers wisely if you're going to go in that direction. I want to talk about sort of as you see more demand growing, do you have any concerns about the production of batteries, given that it is the core part of these vehicles? Is there sort of a supply chain issue? And I ask this because we've talked to several EV makers in the space, including Arrival recently. They're banking on their idea of these micro factories going into existing ones and creating something that is a fraction of the cost and then the infrastructure. And then you, of course, have Tesla, which does everything vertically integrated. So just explain a little bit there about how you might keep up with more demand as you have more models coming out.
Well, I think that if there's money to be made, then there's always somebody who's willing to produce it. And, everybody knows we're going towards electrification in a big way, which is why you're seeing huge investments coming in from the big battery makers, especially building new factories in Asia, building new factories in Europe, building new factories here in the US. So I think that the large battery makers will find a way to keep up with demand. That's number one. Number two, there has been in the past a lot of promises from a lot of different car makers, which have launched electric vehicles, and battery makers have set up, production lines, and then they didn't meet expectations. So I think that they're a little more careful now with who they work with and what they accept in terms of volumes. We are working with a battery supplier, which we have known for a long time. It's one of the five biggest ones. And they really have trust in us, our products. They believe that we are going to reach our volumes. So we have already nominated that battery supplier. I don't think we, Fisker, will have an issue with getting the amount of batteries that we need. A part of this, of course, is also that when we launched the Fisker Ocean, we are doing it with Magna. Magna is a very renowned automaker, so they are able to scale up. So there's not a risk there where a battery maker is wondering whether an EV startup can truly scale up as fast as they claim. This is really on Magna's plate, and they know how to do that. They're building cars from many different OEMs. So I think we have sort of put ourselves in a position which is a little unique as an EV startup, where I am very confident we'll have the batteries we need.
Last question on Enrique here. This now being your entry into public markets and life may be very different. Explain to us how things may have changed operationally, the way that you have been running things and you look at the future of Fisker. How has that changed now that you are public?
Well, in terms of how we are running it, I don't really see any changes because we have always run this as a very, I think, organized and lean company, and we'll continue to do that. So in that case, not much have changed. I'm sure our CFO and in the financial department, they have different thoughts because there's a lot more disclosures and all kind of stuff and audits and things that you have to do, which I see as a good thing because we are fine with that. We are really a well-run company. It's where the real change is as a public company, I think, is it's easier to do business deals because everything is transparent. You know, when you're a private company, you have to spend more time diligencing. So we don't really have to do that at this point in time because we're public. And then secondly, you know, eventually later access to capital is going to be de-risked by being public. Whereas when you're private, you're always in the hands of, you know, the mood of the private investors, the mood of the market, and that changes rapidly. And I've been there, done that. So I think being a public company actually is a much better path, and it's a path I think that is going to be accelerated because we are public. So I see only this as a positive.
And you do need a lot more capital now with building these vehicles and more. So best of luck to you and the company, Henrik. It's always a pleasure. Thank you for joining us, Henrik Fisker, who is the CEO of Fisker. Thanks again.